As of October 28, 2024, Bitcoin is seeing renewed bullish interest amid its halving cycle through the market, though the market remains volatile. Gold and silver are expected to recover after minor corrections fueled by ongoing inflation concerns. Iron ore prices are pressured by abundant supply, reflecting weaker industrial demand. Crude oil is continuing its upward trend as geopolitical tensions and supply cuts persist. However, demand uncertainties in China and potential rate hikes globally create caution across these commodities. G'day everyone, welcome back to another update on Market Update across a few commodities, and today we're looking at Bitcoin as well. And we've got here the trends first off for Bitcoin on the monthly, weekly and daily. On the monthly, you can see there it's stuck in that moving average range of the CCI 150, although the price has broken above its respective moving averages, and it's been sort of moving sideways now for a number of months. On the weekly, it did actually break below that moving average range of the CCI, and it finally broke above in the last couple of months, showing some bullish movement. Although on the daily, if I expand that, you can see there it's hit this key resistance at 70.020, and the CCI has been just breaking above, fresh breakout on the daily as well, after being in that moving average range in the last few days. Now, if we go to the micro charts, we only take trades in the direction of the higher time frame. So if you're trading on the hourly, on the intraday, you take trades going long as per the daily in this case. You can see that you would have taken a long trade during that period there, and you would have closed it out when the CCI broke into that moving average range. At the moment, the CCI has broken below that moving average range, giving us a slight bearish momentum. So avoid going long or short until we see this adjust itself. Now, this could break down in the coming days on the daily, in which case you'd take short trades. Iron ore has been sort of fluctuating sideways for a number of years now. You can see there it's just below the moving average range of the price chart. There's no CCI for it, but you can see there on the price chart it's pretty much consolidating in that range. On the weekly, it actually did break above the CCI moving average range, and you can see there the price is struggling to break above as well, giving us a slight bullish momentum on the weekly. And on the daily, it actually did break above that moving average range, and then it's pulled back and it's now broken below, hit that range on the price chart as well, and now it's broken, giving a fresh breakout to the upside. So if you are trading this on a daily time frame, potentially it's a fresh breakout, and you can take long trades on this one in alignment with the weekly being bullish. Going to the intraday charts, so again, taking long trades only if you're trading on the intraday. You can see there the hourly is also bullish, and I'm looking for any divergence, and there's no divergence currently showing on the daily or the hourly, and we always look out for those bearish or bullish divergence. Back here, for example, we had a bullish divergence, higher lows on the CCI versus lower lows on the price. That also coincided with this bullish or this support level at 656, and it bounced quite nicely well above the 100% retrace level of that Fibonacci range. For silver on the monthly, it's giving us a nice big bullish signal since the start of the year, and the price is still moving to the upside. On the weekly, however, we had a bearish divergence here initially versus lower highs on the CCI versus higher highs on the price. You can see there that wick touched that minimum target range, and it's bounced from there. Now, we could possibly extend that. Let me extend that Fibonacci as well, and that trend line. We can possibly extend that further to that fresh 23.38% level. So if that price starts falling back from where it is at the moment, we expect it to hit that target as a minimum, and about over 90% of the time it does hit this minimum retrace level. That's on the weekly, so just be careful of any pullback on the silver price. On the daily, it actually broke through this 34.27 key resistance, and again potentially pulling back. You can see there the CCI is broken down through the moving average range in the neutral zone, and the price is actually pulling back towards its moving average on the price chart. You can see we had a bearish divergence here as well versus higher highs on the price. It broke down, hit that 23.38% level, then it bounced from there. So that little bearish divergence worked nicely. If we go to the intraday chart, again, we don't take long or short trades until we see the daily break above or below that moving average range. But at the moment, the price on the 1 hour chart is still trending down, and no sign yet of a pullback or a recovery. Now, you'll notice here as well, we did have a bearish divergence, lower highs on the CCI versus higher highs on the price. That actually pulled back, And if we drew a Fibonacci between that high to that low, you can see there it's hit that minimum target range, 38% level. It's currently in that range now. Now this could fall further. The CCI is still dropping, and this could still fall further. And the key area to watch is this 61%. If it falls below that, then we're looking at approaching this minor support here at 31.30, possibly. So I'll take it one step at a time. Let's see if it keeps falling. So the trends for gold on the monthly, again, it's been bullish above the moving averages for some time, since late last year, and still rising. On the weekly, we do have a bearish divergence. So if I zoom out, you can see there's a lower highs on the CCI versus higher highs on the price, and if that pulls back, that'll be our minimum retrace level. That's assuming it pulls back from now. Of course, it could go higher. Even though the CCI might still drop, that price still might go higher. So as soon as we start seeing it pull back, that'll be our minimum target range. So again, I'll keep an eye on that on the weekly. On the daily, it's actually broken up through this key resistance at 26.85, and this could be another resistance level up there. So I'll keep an eye on that. And again, zooming out, you can see we had another bearish divergence there, and that's still actually, even if you break it down to that smaller range between that high and that high, that's still a declining CCI versus higher highs on the price. And again, I'm not going to draw a target yet until we see this start pulling back towards this moving average range. That's on the daily. And if we look at the intraday charts, we only take short trades in accordance with the daily trend. This is the hourly. So again, only short trades to be taken. If I put in the short arrows, you can see that the CCI is dropping. The price also seems to be dropping. And you'd be waiting for a new a retrace to the moving average range and a fresh breakout to the downside like I did back here. That would have been a nice area to go short. And again, you'd probably still be in a trade on that one, waiting for it to touch that moving average range of the CCI. Lastly, for US crude oil, on the monthly, it's broken into a bearish momentum. You can see there it's below the CCI moving averages and also the price moving averages on the monthly. On the weekly, it's a fresh breakout to the downside on the CCI, and it's already been below that moving average range of the weekly moving averages, and a fresh breakout as well on the daily. A couple of daily bearish candles there, and again further downside potential. So be careful. We've got this gap down, and we may see it retrace to the upside to fill in those gaps. But again, we'll keep an eye on that, see how it goes. But to go to the intraday chart, again, we only take short trades in accordance with the daily. If you're trading on the hourly, you can see there that gap down, big massive gap, and the CCI is still below its moving averages. Now, if you went short there, you might make a few pips and wait for it to break into that moving average range to close out your short positions if that happens. And when it doesn't, if it breaks to the downside again, as long as the daily is still in a downtrend, you take further short trades once it breaks a fresh breakout to the downside. So if you got value out of the video, hit that like and subscribe button. Support us more on Patreon. Thanks for watching. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.